right? Okay, the quality is good. You have received our warehouse has received these goods. They give you the documents. Or if you are sending him check, then do send him the check. Don't pay in cash, pay in check, because check has some kind of tracking. Plus, if you are sending him electronically, then that person who has authority, he puts his password and then send it. But before that one, all the documents must be there. Understand? It also provides you transparency and control. So here we go. This is a flowchart. It will best analyze your. So first of all, when you receive pay order, then you make merchandise inventory and invoice, right? And that invoice will go to the manufacturing facility, and they will give you a receiving report upon receiving the goods that you have in your purchase order, right? And when everything is good, then the receiving reports will go to the check or ETF department, and then they will give you they will give you they will hand over the ETF or check or details to the company, and then company can see you can see your bank account, or you can come and collect the check anytime which is convenient to you, right? So all these steps, it gives you transparency and control. So before signing the check or approving the EFT, electronically fund transfer, the Treasury Department should examine the packet to prove that all the documents agree. From purchase order, you see the invoice and you match the invoice with the receiving report. Similarly, now I was talking about the petty cash. Petty cash is a very small fund for minor purchases like disposable glass, water, disposable water or mineral water bottles you purchase on day-to-day basis, tea expenses, coffee expenses, this kind of stuff, right? So the custodian is solely responsible for the accounting. The person who is authorized to have this petty cash, he would be maintaining his own a small accounting or a book on which he's writing, okay, the manager today 10 customer meet the manager, and manager offered them some soda water, some ice cream, or maybe some coffee. So that expenses we will be covering this from our petty cash, right? Petty cash are small funds. For example, for a company, maybe, so every manager, they have his limit. For example, you cannot exceed from the $500 a day or $100 a day, right? So you need to manage accordingly. So the amount is set. It should be in cash. Why? Because it is readily available. So if you want to buy water and you are issuing check to the small tuck shop, he will refuse. Why? Because he would say that when money is transferred to my account, then I will hand over you, and it takes time. So that's why company give a small cash account, a cash for minor purchases, and company will hand over this cash to its custodian. So each time when something is purchased, a voucher is prepared, right? So Impress system, which is sum of funds plus paid vouchers, should be equal to the amount. So there is some kind of Impress system as well, we call that, in which, for example, this department or this section has this much amount to spend for this day. So when you add all the stuff and you say that my cash is going out, for example, from my cash drawer, $100 is going out, and I receive $100 vouchers. That okay, $100 vouchers. So $100 going out, and the voucher that is approved by the, or the receipts are from that tuck shop or something, I already have there. So this is called impress system. Everything is impressed. Now let's go to our today's objective, which is construct and use of a cash budget. So the objective from this chapter, chapter 4, beside this theoretical stuff, which is very important, no doubt, but for numerical perspective or accounting perspective, two things are important in this chapter. Number one is the handling of cash through bank reconciliation, when you make bank reconciliation, and then what entries are required after that. So we did that in our last lecture. So today's lecture, important stuff is to construct the cash budget and how we can use that one. So let's talk about budgeting. So a budget is a financial plan to coordinate business activities. What do we mean by business activities? How much we are receiving, how much we have to pay, right? So these are normal big business activities. Cash budget, which means budget plan. It's the plan, okay? So that's why it will be including planned cash inflows and cash outflows. Cash inflows are called receipts, outflows are called payments. Let me write it down here. Receipts means inflows, payments mean outflows. So when you are making cash budgets, steps involved, first of all, you start with the beginning balance and how much cash you actually have right now, right? And how much is forecasted inflow. An inflow already. So tell me, what kind of inflows a business can have? So through which means, let me have a white background here, and then we discuss. So if this is a business here, so guys, do participate. Through which means cash can come to the business.
Through which what?
Which activities brought cash inflows to the business? Everyone.
Investments.
Customer payments.
Customers.
Good. Number one. Customers.
Bank interest.
Bank interest, which kind of interest? Revenue or expense?
Revenue.
Revenue.
Good. Now third one.
Selling assets.
Well done. We call this cash flow from investment. Well done. And David, ping ping.
Loans, maybe.
Well done. Sibade, you must go to the finance degree or accounting degree. So a business can have inflows, okay? And how inflow can or cash come to the business? Either through sales. And which sales? Cash sales, not the accrual sale. Okay, the customer will pay us later. No, cash sales, because when customer will pay us later, then it doesn't involve any cash. So it's not a part of cash budget. Remember, cash budget, we only deal with cash inflows and cash outflow. So cash sales, I think I should write it down here. Inflow activities. Inflows can be from sales. Which kind of sale? Cash sales. Number 2, when customers pay you, from customers. Third, sale of assets or cash flow from investment. Sale of asset. Bank loans. Right? You apply loans and bank give you cash. That is also inflow, right? And through issuance of stock. You issue your stock to the public and public purchase the stock, give you cash coming to your business. We call this financing or equity financing. Six, that you have cash that is deposited with the bank and bank give you interest revenue. Any other possibility for inflow? I think we already discussed all the possibilities. If there is a possibility, please do include it here as well. And what are the outflows? Can you give us the outflows examples?
Expenses. And
What?
sort of expenses.
Very nice. Expenses. I think I should turn off my video and take the screen out because it's really hard for me to write down like this. Okay, guys, be patient.
Sure.
Let me remove this screen. Okay, the outflows examples. Expenses, right? And expenses may include the cost of goods sold, salaries,